Hello Value Investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I'm going to talk about MongoDB. So it's quite an exciting company. It just reported earnings last week, and this is a company I've been quite bearish on for some time. So this is just something that results came out, and it's very exciting. And I'm just going to go through what I think about its new run rate, what I think about its path to profitability, and then we're going to talk about its valuation. So I'm just going to jump right in here. So as I said already in the introduction, this is a company I've been quite bearish on for some time, and I'm quite happy to change my mind as things change. And the company put out such a strong performance that I'm happy to say, okay, yeah, fair enough. I was bearish this company. I never had any position in it, but they're doing something that's clearly amazing. So here's the chart right here. So Q2 revenue growth rates came out at 44% year over year. So as you would expect, they beat on top line. I would say as you would expect, because they put out guidance. So it's a SaaS company, so they put out guidance that they kind of know that they can beat, because customers are locked in. It's a sticky business, so they put out guidance that they're saying, okay, we're just going to give you this, but then we're going to be able to beat it anyway. And this is the case I wanted to reinforce here. So if you think about it, when they put out their Q4 guidance 2 quarters back, they were guiding for approximately 755 million for the year. Okay, so they were guiding for 755 million for the year. Then as the first quarter came out and they had that under the belt, they revised upwards their guidance for the year for 777. So so there's like a big step up right up. And then as Q2 came out, they now once again raised their guidance again to 808. So as the year kind of continues to progress, they're really able to have that more visibility, and they're giving investors what they want. Investors really want steady dose of surprises on the upside. So that's what the market wants, and that's what the company's giving. So it's a very good relationship that they're putting out there. If they come out too aggressively at the start of the year, then investors wouldn't be. Investors want that dopamine. Investors want to really kind of see as the quarter progresses more and more good news, and that's exactly what the company is giving them. And the other thing that I wanted to point out is that the real crown jewel is MongoDB Atlas. So this is a multi-server platform, and it really allows the developer to work from anywhere. And what's particularly strong here is the non-relational database. So this allows the developer to crunch data from many different places, for example, that is not in a rigid format. So if you think about social media, that's data that's out there that's very powerful for a certain company, but it's not in a very easily structured cell, and the data can be added on and taken away all the time. So it's kind of what they call always on data. So it allows the developer to very quickly get hold of data, search through the data, and it started off as this MongoDB's multi-cloud offering started off in fiscal 19 as being less than a quarter of the company. As you can see here in the graph, it's just 23% of total revenues, and it has been consistently growing its percentage of total revenue, and right now it makes up approximately 56% of total revenue. So if you think about it, if we just go out, let's say a few quarters, like 3 or 4 quarters, this will be approximately 2/3 of the company will be on this license model that's on a cloud offering. So this is something that investors are just totally salivating over, because you get a very sticky business, you get a lot of visibility, and this is something investors have always really looked towards, and they're rewarding it at the stock as well. Let's not forget that. Now here's another thing that I wanted to point out. So at the end of fiscal 19, at the end of fiscal 20, its non-GAAP operating losses were 54 million. Okay, so non-GAAP operating loss was 54 million. Then went forward a year to fiscal 21, and it went to approximately 62 million. So very much thereabouts, around about this kind of 55-60 million net operating losses. And as we look out to the end of this year, I think I put it up there, so they're guiding for approximately 62 million again. So it's very much a company that's, I estimate that in the next, let's say, after the next 90 days, they're going to be on a run rate of approximately $1 billion in revenues, and they're just burning through less than 100 million, so closer to 60 million. So as long as they are kind of being very prudent here, investors are going to be very happy with that, because as long as they come in prudent on how much they're burning through and they're able to demonstrate that they continue to grow at a very steady clip, I mean, investors are going to be like, yeah, keep burning through 60 million and you keep plowing forward to $1 billion in revenues. That's just fantastic, and that's what investors are pretty delighted here. So as I started in the introduction, we're thinking about a company that's priced at approximately 31 times next year's sales. Okay, so this is punchy. It's not cheap, because it's not this year's sales, it's next year's sales. Okay, if you want to compare with something like Elastic is priced at 15 times next year's sales, so it's half the multiple. So investors, the confidence that investors have on MongoDB is like really, really high. They like expect the company to do really, really well. You may counter that by saying, okay, yeah, but Elastic has 3 units. It has its monitoring unit, it has a security unit. It's only the search unit that really overlaps with MongoDB, and even then, Elastic is not really at the same level of the company is not as strong as MongoDB. So you could say that there's a reason why Elastic is cheap. The other problem here is that there's not a real direct comparison for MongoDB. There's not a pure play competitor out there that you can really say, okay, look, MongoDB is priced at XY because this company is priced as ZY. It's like, it's difficult to really put out a comp. If you want to just kind of more broadly, these are not direct peers, but if you want to just more broadly talk about the SaaS space, Okta, which I think is a company that's never been really cheaply priced, and it's priced at 24 times next year's sales. So if you think about MongoDB at 31 times, it kind of MongoDB looks quite expensive. If you want to say, okay, it's not the most expensive in the SaaS space, because Cloudflare is priced at how much did I put it out there? So at 48 times next year's sales. So Cloudflare is priced probably as one of the most expensive SaaS stocks out there. But if one company is priced at 48 times sales, then MongoDB at 31, it's very much reasonable. I think that you can make the argument that it's not a cheap stock, and it's not something that I'm particularly interested in buying, because I think that there are better opportunities elsewhere. But if you are willing to take a buy and hold position here, and I don't just mean buy and hold while the stock is going up, I mean buy and hold, through thick and thin, and allow the valuation to the company's intrinsic worth to catch up with its valuation, its intrinsic value to catch up with its valuation, then there could be a reasonable investment to be made here. But I think that there are still better investment opportunities elsewhere. And if you want to find out what kind of stocks I'm looking at with better risk rewards, don't forget to check out my marketplace. It's called Deep Value Returns, and you're welcome to do a totally free trial to see if it suits you. And I'm not a place to really replace you and your portfolio. I'm just a place for you to give you 1 or 2 ideas a month and say, okay, have you thought about this? This seems okay. I'll do the due diligence on the company, and you can say, okay, I like my ideas, I like my portfolio, but I just kind of pick and choose a couple ideas every so often, because you might not have the time or inclination, or things get in the way of you kind of optimizing your portfolio for your maximum gains. As always, I hope to see you soon. Bye.